ServiceNow shares are under pressure as second quarter bookings slightly missed some Wall Street estimates, in part fueled by the economic slowdown. But execs struck an upbeat tone on the earnings call last night, noting key deals have been closed in July. Joining us now is ServiceNow President and CEO Bill McDermott. Bill, always nice to see you here. We've been talking to you steadily for over 2 years. You're not one to say anything has slowed down. What made you come out here on this call and signal, perhaps things are slowing down just a little bit?
Well, I said, Brian, that digital transformation and the secular tailwinds for digital transformation are blowing much stronger than the macro crosswinds. And that's why, we beat on the top and bottom line, and I have such great confidence in ServiceNow. But at, the same time, we're always mindful of what our customers are dealing with, because we serve customers who serve their customers. So to some extent, you have to acknowledge that environment. But ServiceNow is the fastest growing SaaS company in the world, and we think the most defining platform of this generation, which is why I reaffirmed our guidance at $11 billion by 24 and $16 billion by 2026 with resolute confidence. We're doing great.
Bill, do you still see this business as recession resistant?
Oh, absolutely. The reason for that is the greatest deflationary force in the world is software. It's durable, it's sustainable. And in our case, our platform is a platform that really helps companies do a couple of things super well. One is drive productivity. The work that companies have to do, even as they hire less people, is not going away. So you have to automate. All companies have to innovate to grow, because new business model innovation is a mandatory thing that every executive has to be on top of. And, you have to differentiate to compete. I mean, if you look at the EV market, for example, I just saw that you were talking to Ford Motor Company. Everybody's thinking EV. And not only that, but how do I give the customer an internet buying experience where they can configure, buy online, and have a great experience in the delivery and ultimately the use of the vehicle? That requires tremendous differentiation. And our platform is helping great companies like Ford and many others do that. So it's really a wonderful time to be a market-leading platform in the digital transformation era.
Bill, at a time where a lot of the tech industry and, quite frankly, companies across industries are looking across their headcount and trying to look and see where they need to do cost restructuring. You mentioned on the call that you're investing for the future, that you're still looking to hire. And so what type of hiring on top of the existing headcount that you have are you thinking about right now?
Well, you're absolutely right, Brad. I think this is a time, when most people are hitting the brake, ServiceNow is hitting the accelerator. And the reason that we're hiring engineers, we believe strongly in fingers on keyboards here. We're also hiring go-to-market customer experienced individuals, because we want our customers all over the world to have a great experience with ServiceNow, which they are, by the way. That's why we have the greatest retention rates in the industry. So primarily it's engineering and it's go-to-market with our customers, but it's not limited to that. We are hiring in other positions as well, because we believe so strongly in the growth potential of this company. And we feel that our talent brand right now will benefit greatly from a little bit of courage and a lot of performance.
Certainly. Even as we think about whether or not ServiceNow and the recession-proof or the recession averseness of ServiceNow and its business, that you may be your customers at the same time, your existing customers, perhaps they instead are looking across their own costs as well and saying, we don't know if we're able to buy into more solutions or buy into this partnership even further. And so how would that be factored into even the goals, the targets that you've set for right now?
Oh, that's a great call out, Brad, because you're right. Our customers are right now in the midst of what I call the great reprioritization. They are looking at their business and they're saying, which platforms am I going to team up with for the next decade? And when they look at their legacy business and they kind of say, are we spending too much on things that aren't going to move us forward? They're kind of pausing on those projects, especially the ones that take too long to get to value. And they're looking at platforms like ServiceNow, and they're saying, this is a winner. We're one of 5 platforms in the world right now that truly matter in the enterprise. 3 of them are the hyperscalers. There's one other SaaS company, and then there's us. And what they're basically saying is, we want to do more with ServiceNow. But as they rationalize their spend, what we're seeing is, even if it takes a little bit longer for them to decide, because they are reprioritizing things, our deal sizes are getting much bigger. Our deals over $10 million have actually grown 50% year over year. So you're right, our customers are dealing with the macro. They are reprioritizing, and in record numbers, they're leaning in with ServiceNow as we are leaning in with them.
Bill, how would you compare the current economic slowdown to what you saw going back to the great financial crisis?
Yeah, it's not even close. The one thing, as you know, Brian, about that, it was breathtakingly sudden. All of a sudden in 2008, all the world financial markets were up for grabs. This is much more about an environment where our customers are saying, look, the dollar is at a 21-year high. The interest rate environment is not great. And they have to also recognize that, there's a war out there. There's governments that are evolving, if you look at the UK and other things. So they have to prepare themselves to deal with all that. And, as they do that, they need companies like ServiceNow to help them navigate. That is a business situation. It's probably a 6 kind of month endeavor where things will normalize. I have a feeling we're going to be watching your show in 6 to 9 months when you see inflation come down and, this whole capital tightening loosen up a little bit, and you'll see the stock markets really go for a run. And I'm already seeing, some movement away from sort of energy and commodity back into tech, because as these multiples have reset, it's such a great buying opportunity, and smart investors always get in before there's a rush, because you buy low and you capitalize high.
ServiceNow CEO Bill McDermott, thanks so much for joining us. It's always a pleasure to get some of your insights, and perhaps we'll discuss some basketball next time you're on as well.
I look forward to that. Thank you very much for having me.
Definitely.